All right. Good morning, everyone. Happy Monday. We're going to get right into broad market outlook. Again, big thing this past week that we've seen out of the market is we've been in this obvious breakout stage, stage 2 breakout, which has been great. But lately, last week, we've started to consolidate and put in, the prior high here, it's 444, has acted as resistance. So we're starting to see that transition out of that obvious breakout stage into a, shorter term bull flag that's starting to form, which is good. We need a little bit of consolidation here. It's good to see that, we had this little pivot low held, right here at this, 430 area. So we're just in this consolidation area now. As we continue to pull into this, prior resistance area, into this support line of the overall trend, this is when we want to be a little more aggressive. We don't want to be going too crazy as we, shown that this is now resistance in the short term. We're pulling back into that range of the flag. So I want to be a little bit more patient here. We saw the same thing out of the Qs. Same thing. We had this run up. We had this retest. We have this consolidation forming now. Hey, hello, relax. Sorry if you guys hear my dog barking. So again, we just want to be a little more patient this week. And for the sectors that are setting up, we've seen financials continue to base out here. This next entry through this 82 area. You see energy continuing to form this wedge. It's been doing it for the past more than a year now, a year and a half. Big wedge pattern forming there. We do want to avoid the healthcare and biotech sectors for now. We just see them both kind of aging over here, breaking recent support as they head to the next pivot low. So these are probably two sectors to definitely avoid for the time being until they really shake out and test these bigger pivots a little bit lower. For myself, for some swings, again, I had this, Visa still on. I will more likely be out of this probably first thing this morning if it takes this 236 out. And we'll look for a re-entry in this in some time. This IDXX, this 500 breakout, we did try, a few weeks ago, didn't work, but it's right back up here now, on $20 risk. I got ticked in on Friday. We'll look to add back through this 500 and then try to tighten the stop up throughout the week. The main two focuses on my end for the week ahead is this CMCSA through this 42. Just very standard bull flag pattern, dollar risk here. Not the craziest name, very low beta, lower beta type stocks. I wouldn't expect, another dramatic breakout like it had on earnings, but this is probably a little bit more of like a slow grinder. This DOX is another one, again, more likely we'll get stopped out break even, but we'll look to re-add up to at 98. If this holds, but given the close on Friday, wouldn't be too surprised if this just kind of fails today, and we'll let it shake out and look for a re-entry. So those are a couple of the main ones I'm looking at. I have a couple of ones that Shake mentioned on the newsletter. Let's shoot down. We have this ADBE, a nice little flag up here forming, nice little wedge. Looking through that, 490, 492 area, very tight up here, a very strong name, working its way out of this, major they said, earlier in the year. This CELH, another one, again, nice little flag here through this 150. That's been forming for a couple weeks now. Just flag after flag, which is a good sign. Throw blocks. I know Alex was calling this one out a few months ago through this 42 area. You can just see that it's been, it's clearly been a seller here. We have, 5 or 6 attempts at this level. And the good thing is that we continue to see these higher pivot lows that continue to form. So these buyers and sellers are kind of meeting at this 42 area. And we'd like to see it obviously push higher. Last two, we have this EXPE through this 113, 114 area. And then lastly, the trade of the week is this DE through this 410 area. Moving on, we have a couple member ideas. This IRDM. The key area here is definitely going to be this 62 again. Been flagging out for almost the entire year so far. Kind of can go either way here, either down through support, down through 59, or we get that break up through 62. This yelp here at this 36.5, 37 area. And then, the bigger 39 breakout in time, nice little flag forming in this one. Again, if there's any other member ideas you guys want to go over as I kind of scan through these, just post them in the Zoom chat, we'll pull them up. If there's a VRSN, we definitely can see this bigger level through this 230, going back for quite some time here. Then as we zoom in, we can find a little bit more of a tighter entry, through that 225, where you're only having to really give it versus this 220, you're risking, barely 2% here. I'm not sure who called this one out, but this does look very good here, very tight risk. 225 versus 220, a 2% risk to sneak in before that 230 breakout. That looks really good. You have this STT. You can see this, this bigger base forming through this 76. Looks very good here. It does have earnings coming up pretty soon, so we wanted to just let that report first in a couple of days. We have this PayPal as well through this 70. Gapped down on earnings last quarter. It's been building a little base here. It's up through 70, still a bit wide, but definitely want to keep on the radar. See if we got any other ones. Peg through 64, but it's kind of pulling back a little bit. We need some time on that. And lastly, we have this BAX, a very tight little flag down here to this 46 area versus 44. Earnings is until the end of the month. We have a little bit of time on this one. Let's see. Say average like in CMCSA. Let's see, ball 59. Yeah, let's see, 59. Ball looks pretty decent to 59. It's a little wide right now. You have to get it versus 55 area. So you just want to find a tighter entry in it for now. And the last one is WCLD through 32. And very big base here. We see this level's been valuable for quite some time. 32 versus 30. It's a little wide still. So you're risking almost 8% here. So this can tighten up a little bit more and you can get through 32 versus 31. I think that makes a little more sense. I think right now, just too wide, but definitely very significant level here to keep an eye on. And lastly, we got Chip talking about CRM. So again, we have this, CRM's been on a pretty big tear up, almost 100%, another 15 points. So would be the 100% move up to this 240. Been very strong lately. This 220 seems to be the bigger area of this base. This is like a long-term name I've been in for quite some time. So definitely would like to see it break through 220, but given the run it's been on and this consolidation it's been forming, it probably needs to have a little more of a kind of shakeout move to kind of run some stops here because it's just been very tight for the past few months. If it can grind higher again, I've been in the same for quite some time, so I would want that to occur, but I wouldn't be too surprised if we need to see kind of a push below 200 before we see any move or subsequent trade higher through 220. So I think this one needs to give it more time. It really needs to digest this dramatic move that it's had over the past 6 months. And this, 1 month consolidation probably isn't enough just yet for that next leg to push it through this 220 and, continue its path towards, the retest of 300. So hopefully that covers everything. Oh, we got one more. DKNG. Last one. So again, we can see the breakdown DKNG. We can see the base pretty much all of the late end of 2022 and 2023. And now we can see the breakout stage that DKNG has been in, which is a good sign. We just need a little bit more consolidation, a little bit more of a defined entry, because right now, if you're looking to buy through the highs, you're buying through 27, and your real pivot is probably this 25 here. So you're giving this name almost 10%, and it's given the strong closing out on Friday. You're just giving a lot of just Friday's risk, just to kind of chase that move. If this can trade a little bit more sideways and consolidate in this area, we get a few more attempts here. I think this 327 looks good, but I wouldn't be trying to buy this first thing off the open, given that it's pretty much trading 27, a few cents under the level. So I'd keep this on the radar, but I wouldn't try to chase this Monday morning through this 27. And I think we covered all, guys. Again, a little some pickings right now in this consolidation that we've had. Again, it's very healthy for the market. We want this consolidation. We want all this market pull in and maybe even push down to this 430. That's all going to be very healthy action. So just be patient, keep your ideas very focused. I wouldn't be trying to spread yourself too thin this week. And any other days you have, again, just call them out in the chat and we'll go over them.